Today, we're doing something that sounds boring, but it's actually one of the most misunderstood money topics on YouTube. How much dividend income do you really get from $10,000? Because I see two extremes online. One side acts like dividends are useless. 10K gives you nothing. The other side acts like dividends are magic. 10K pays your bills. So in this video, we're going to do it the honest way. No hype, no fantasy, just realistic numbers, real math, and the stuff most people leave out, like taxes, dividend cuts, and the difference between dividend yield versus total return. And stay until the end because I'll show you the one thing that makes dividend income actually meaningful: time plus dividend growth plus reinvesting. Quick disclaimer, this is educational, not financial advice. Numbers are examples. Yields and market returns change. All right, let's start with the most important question. What do people think dividends from $10,000 are? When people hear dividend income, they imagine a monthly paycheck. So let's test that idea. Dividend income is basically annual dividend income equals investment times dividend yield. That's it. So if you invest $10,000 and your dividend yield is 3%, then $10,000 times 0.03 equals $300 per year, which is $25 per month. And that's usually the moment people go, wait, that's it? But here's the twist. That number isn't wrong, it's just incomplete. Because dividends are not only about income today, dividends are also about income that grows and shares that compound and a strategy you can stick to when the market is scary. So let's break it down properly. The realistic dividend yield ranges. In the US market, a normal dividend yield for diversified, high-quality stock ETFs often sits roughly in these buckets. Bucket A, dividend growth or quality, lower yield, about 1% to 2.5%. These are companies that tend to grow dividends over time. Bucket B, broad dividend funds, middle yield, about 2.5% to 4%. This is where a lot of classic dividend ETFs and blue chip portfolios land. Bucket C, high yield, higher risk, about 5 to 8%. This could include REIT-heavy funds, covered call strategies, or riskier pockets of the market. Bucket D, very high yield, usually a red flag, 9% to 12% plus. Not always bad, but very often it means extra risk, leverage, declining businesses, or distributions that can drop. So when someone asks how much dividend income from $10,000, the answer depends on which bucket you're in. Now let's do clean math examples. The simple math, what $10,000 pays you per year and per month. Scenario 1, 2% yield, conservative or dividend growth style. Annual, $10,000 times 0.02 equals $200 per year. Monthly, $200 divided by 12 equals $16.67 per month. Scenario 2, 3% yield, very common balanced dividend range. Annual, $10,000 times 0.03 equals $300 per year. Monthly, $25. Scenario 4, 4% yield, higher dividend tilt. Annual, $10,000 times 0.04 equals $400 per year. Monthly, $33.33. Scenario 5, 6% yield, high yield territory. Annual, $10,000 times 0.06 equals $600 per year. Monthly, $50. Scenario 10, 10% yield, extremely high yield. Annual, $10,000 times 0.10 equals $1,000 per year. Monthly, $83.33. Now, here's the key point. Even at 6%, you're not living off dividends. You're basically getting a streaming subscription and groceries, depending on where you live. So if someone promised you $10,000 dividends will replace your job, they either mean you'll need a lot more than 10K, or they're using unrealistic yields that come with big risk. But let's not stop here, because this is where people make mistake number 1. They think dividend investing is about finding the highest yield. It's not. The biggest trap: high yield versus safe yield. A high yield can happen for two totally different reasons. Reason one, the company or fund is truly paying a lot. That can be fine. Reason two, the price fell a lot and the dividend didn't adjust yet. That's dangerous because yield is dividend yield equals annual dividend divided by price. If the price drops, yield looks higher, even if the business is getting weaker. So you could see a 10% yield that's actually a warning sign. Earnings shrinking, debt rising, dividend about to be cut. And when a dividend gets cut, two things often happen. Your income drops, the price can drop again because investors panic, so the 10% yield can turn into 7% yield plus capital loss plus stress. And that's the opposite of what most people want when they say dividend income. So instead of chasing yield, you want to understand the two types of dividend strategies. Two strategies, income now versus income that grows. Strategy A, income now. You aim for higher yield, more current cash flow. Pros, more money today, feels rewarding. Cons, it can be riskier, income might not grow much, could drop if payouts are cut. Strategy B, dividend growth. You accept a lower yield today, but focus on companies that grow payouts over time. Pros, income can rise faster than inflation, often better quality businesses. Cons, income is small at the beginning, requires patience. Now let's do the math that most people never do. What happens if you reinvest dividends? Because that's where $10,000 stops being small money and starts being a compounding machine. Reinvesting dividends, the compounding engine. Let's keep it simple. Imagine you get 3% dividends and you reinvest them. That means your $10,000 becomes year one end from dividends alone, $10,000 times 1.03 equals $10,300. Year two end, $10,300 times 1.03 equals $10,609. Year 10 end, $10,000 times 1.03 to the power of 10. Now, 1.03 to the power of 10 is about 1.3439, so that's roughly $13,439 after 10 years from dividend reinvesting alone, and that's before counting price growth. But real portfolios also change in price, so dividends are only part of the total return. That leads to the real truth. You don't build wealth from dividends alone, you build wealth from total return, and dividends are one piece of it. So let's model realistic total returns. The realistic total return math, the part that changes everything. Historically, U.S. stocks have delivered returns that vary widely year to year, but long-term, many people use conservative ranges like 6% to 10% as planning assumptions, not guarantees. So if your dividend ETF portfolio ends up delivering 8% total return, dividends plus price growth combined, then future value equals $10,000 times 1.08 to the power of n. Let's calculate. 10 years, $10,000 times 1.08 to the power of 10, approximately $10,000 times 2.1589 equals $21,589. 20 years, $10,000 times 1.08 to the power of 20, approximately $10,000 times 4.6610 equals $46,610. 30 years, $10,000 times 1.08 to the power of 30, approximately $10,000 times 10.0627 equals $100,627. That's the moment you realize $10,000 isn't small, it's a seed. But okay, let's bring it back to the title, dividend income from $10,000. If your portfolio is growing and you're reinvesting, your income grows too. Let's say you buy a diversified dividend ETF yielding 3% and dividends grow at 5% per year over time. Your first year income, $10,000 times 3% equals $300 per year. If dividends grow at 5% per year, then after 10 years, your annual dividend per original shares would be $300 times 1.05 to the power of 10. 1.05 to the power of 10 is about 1.6289, so that's $488 per year. That's dividend growth, without even counting reinvestment. If you also reinvest dividends, the ending income can be meaningfully higher because you own more shares. So your $25 per month doesn't stay $25 per month forever. It grows. Now let's make this video super sticky with a mini truth bomb section. The truth about living off dividends, the math people avoid. Let's say you want $1,000 per month in dividend income. That's $12,000 per year. If your portfolio yields 3%, then you'd need 12,000 divided by 0.03 equals $400,000. If your portfolio yields 4%, 12,000 divided by 0.04 equals $300,000. If your portfolio yields 6%, 12,000 divided by 0.06 equals $200,000. So now you see the reality. To live off dividends, you typically need 6 figures to multiple 6 figures, depending on the yield and risk. So $10,000 won't give you quit your job money. So here's your realistic answer. Dividend income from $10,000 is usually somewhere between $200 and $600 per year for diversified stock-based dividend strategies, depending on yield. That's $16 to $50 per month before taxes. Not a salary, but it's a seed. And if you reinvest and let the portfolio grow, the dividend income grows too, especially over 10, 20, 30 years. Now I want you to comment this. If you had $10,000 today, would you prefer A, higher income now, or B, lower income now but faster growth? Type A or B in the comments and tell me why. And if you want, my next video can be how much dividend income from $100,000, realistic numbers, or how to build a 3 ETF dividend portfolio step by step. Just comment which one you want and I'll make it for Sara Trades.